The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army. CBR Street Gang, this is Almighty. Standing by, over.
All right, let's get the microphone test out of the way here before we get rolling. Let me get the music under control for me real quick. Let me know if you can hear me across the various chats. and we're going to get started here shortly. All right, so let me get the music under control and we're going to get started. Thank you for letting me know that you can hear me. For those of you in Twitch, come on over to YouTube. I posted the link for you guys. I can only really observe one chat at a time. So if you want to chat, come on over to Landy's Crypto Corner on YouTube. All right, let me get the music under control and we'll get rolling. We are also streaming on x.com under the username CryptoLandy. If you are over there, hello. I cannot see the chat there without getting feedback. So if you would like to chat, I would suggest you come on over to Landy's Crypto Corner on YouTube. It's linked in my profile there on X. All right, let's get this set and let's get rolling. Hello and welcome to Market Madness Technical Analysis Live here on Landy's Crypto Corner. Today is January 17th, 2024. It is a Wednesday, so it's kind of a down day in the markets typically, Wednesday, Thursday timeframe. Now we do have some potential setups coming up here on Bitcoin if we do get a few confirmations as we head into close today. Now, not looking too great at the moment in some of the lower term timeframes, but still just ranging around. Let's go over and start with the Bitcoin in 60 seconds chart here. This is the chart that you typically see in the Bitcoin in 60 seconds shorts videos here on YouTube and on x.com. I also show it in my Staring at Charts series as well. Now, if you were here on Monday's live stream or you watched yesterday's Staring at Charts video, you'll note that Bitcoin has been hanging out in this weekly support resistance area between around 43,200 to 41,800. Yes, we did get a little bit of a deviation close, open and close here, or close open rather. That does have the potential to set a low. Now you will see this show up as a technical low on most RSI indicators, but momentum is still strongly against price rising right now in terms of a stoke, and this is really only a closing and swing low that has come up and tested overhead resistance at the weekly. Yes, we did get a spike to around 43.5 or 6, depending on your exchange, but it is, not really showing much strength in those lower term timeframes. It's just consolidating. So we do need to be aware of a possible consolidation that turns into a distribution or a consolidation that turns into a retest of overhead resistance up here. So let's talk about that real quick. If Bitcoin does close back below the lower first here, which is coming in at 42.2, and it loses the weekly at 41.8, I would expect it to test the current low side structure around 41.5 or so to the close open there at 41.7. If this area is lost, I would keep an eye on the lower second standard deviation down here in the mid $40,000 region, coming in at around 40,600. And if Bitcoin does close below there, we would see expansion of volatility and we would see expansion of the Bollinger Bands a little bit more aggressively, but it needs to then go and break down from the actual lows here. That being these, specifically rather, the swing low down here at 40,150 or $40,000, which is the weekly open from early December. We'll look at that again just to revisit it. From there, if it did happen to break down from the lows, of course, that would not only kick off, expansion to the downside on a break of the lows, but, we would start to look where the daily lower third is as a potential area of interest. And this is coming in at the weekly at $39,000 to the monthly at 38.5. For those of you that have been here for a while, you already know that these areas are getting a little redundant in terms of calling them out, but we still do need to remind ourselves that these are big support resistance areas, especially around this monthly. If this monthly is tested, this would be a retest of a prior resistance area, as we did see it tested a couple of times on the daily chart before moving through that area and up to the weekly and subsequently the monthlies overhead. But we have not seen a direct retest of this area. So I would be looking for a retest and possibly a bounce in the lower term timeframes that could turn into something more. And I'll show you why in just a moment. But if that area did break down, I would keep an eye on this big weekly zone. And this is a big one. There was a bit of consolidation here. This consolidation is coming in from the first test in early November through to its breakout in December 1st, as a matter of fact, which was a Friday that led to the new highs of 2023 and then, of course, of 2024 early January. Now, this big zone is coming in at 37.7 on the top side of the weekly there, and the bottom side closing structure of the weekly at 36.2 to 3. Of course, if that area doesn't hold up, we look to the next big zone that has actually been tested as resistance and support, and that is the monthly at $35,000 to the weekly at 34,750. Now, I don't think it's really worth looking too much further down at the moment, but maybe it is worth talking about if we did see some sort of hellacious dump off. There is an untested redistribution daily from the bear market, and that is coming in at 32.4 to this big monthly breakdown area. This was the monthly that broke down from the bottom side of the higher low structure of the bull market in 2021. This occurred in 2022, where the daily, weekly, monthly close came in at 31.8. This would be another big area to keep an eye out for, and then weekly is just below it in the mid $30,000 region to low $30,000 region at 30,600 to 300. I'm not necessarily looking there first. If anything, you'll see that we are starting to get some signals that are building that this could result in a bounce here from this weekly zone that Bitcoin is currently trading in. It's not confirmed yet, but I do want to show you the setup so that you are aware of it. But if it did bounce from here, regain the weekly at 43.2, take out this local wick high of this low side structure currently. It's also a swing lower high if we do see a close below the wick here at $42,000. But if we did see this wick high taken out at around the mid $43,000 area, we have that basis band just overhead at 43.8 above there. And I would target a retest of the upper first, which is coming in just under this monthly at 45.5. This is where things could potentially change around pretty drastically. If Bitcoin were to regain this area, I would be looking for a run of the highs here at the monthly to the current wick high of this particular move. That is coming in at $47,000 right there at the upper second standard deviation. And then above there, the monthly swing high at 48,240 to the wick high at $49,000. If we did start seeing Bitcoin test this area again, I would be looking for that wick high to get ran around $49,000, possibly a spike up to 50. Any closes above this wick high, and I would start targeting the mid to low $50,000 region. So we'll look at that on the Bollinger Band volatility levels here on some of the longer term timeframes. But first, I want to come over here to our clean chart with just Bollinger Bands. And of course, this is the Landy Bands. These are free. You can find them in the link in the video description. They're highly customizable. They have MAs and EMAs. You can switch them They also have a built-in BBWP. Thank you very much, Caretaker, for allowing me to pilfer some of your code um, to get BBWP and the moving averages and stuff working in this indicator. There's also a super trend in here, and then there's some signal settings under the style tab. This will be rearranged pretty soon here. I have a pretty big update to this coming. So what I want to note here is that volatility remains high. And when volatility remains high and the Bollinger Band spread is, well, on the low side at 40,000, 500 or so to 47,000. So we've got, basically a $6,500 to $7,000 range on the bands. I'm not really looking for crazy big moves that don't get picked up in either direction. So that would be seeing selling on the high side and buying on the low side of these bands when we see volatility still pretty high like this. So, my bias is right now, I'm not looking for, crazy big trending moves to occur until we see a break of either the lower second or upper second that then come back up and probably get, result in either lower highs in either direction, spike down and then bounce up, or spike up and then get rejected, something like that. If it were to spike up and start to take some of these highs on a close and maybe even test the wick, then I would be on the lookout for higher low structure to form. Right now, this is just a consolidation. So I'm seeing a lot of hand wringing all over Crypto X, formerly Twitter, Crypto YouTube, various forums, even Bitcoin Talk. There's a lot of hand wringing. There's a lot of like, this is gonna come down, and it's going to be extremely hellacious, and we're gonna get really low prices again. So get ready to, there's a lot of people saying, get ready to start buying again, buy the dips. Well, one, that's financial advice, and I don't give financial advice. We read charts here. But I'm not looking for this move to occur, any kind of downside move or even a sustained uptrending move, anytime soon. I would look for it to develop. We could still see very big moves within this range, and the range is big. If you want to take lower third to upper third, we've got $39,000 right there at weekly support, and the upper third is all the way up there at nearly $49,000. So there's a $10,000 range, and Bitcoin, during bull markets, especially the last bull market, you could sneeze and it was putting on a $10,000 move to the upside or downside, typically more around the $5,000 move range there. But I would be looking for this to start getting rolling after we see compression of the bands here on the daily. Now, something I do want to draw your attention to is the regular Stoch. This is not a Stoch RSI. This is a stochastic oscillator with pivot readouts. This is the BA reverse Stoch panel. You can find it for free in the indicators tab up here. And I do suggest that you use a regular Stoch if you are using RSI already. There's no reason to have a Stoch RSI and a regular, a Stoch RSI and RSI. You're basically measuring the same thing. One is just an oscillator for the other, whereas a regular Stoch is measuring close over close price action. In this case, we can see that this is getting down into the edge of the oversold zone. More importantly, I want you to pay attention to the pivot as it updates after close today. Currently, it is coming in around 44,500. Now, if Bitcoin were to regain 44,500, what would that look like on the volatility levels of the Bollinger Bands? Well, that would put it above the basis. And if it did get above the basis, I would be looking for it to test somewhere around the upper first. So that this does mean on a close, by the way. So if Bitcoin were to put in a candle that closes above the basis, which is coming in at around 43.8, I would look for that pivot where it currently is to get tested, and that's at around 44.5 to the upper first initially at 45.5. If we did see closures above there, then I would be targeting around the closing highs. You can see that the upper second standard deviation is coming in right at the close open high here at $47,000. That, of course, is a monthly resistance area currently. So just be aware of where we are. I also want to note on an RSI indicator. So this is a paid RSI. There's plenty of free ones that you can pick up that show you divergences, and that even have info panels over here for where what the price levels are on the various areas of RSI. You could just search for them in the indicators panel. This one is a paid one from the caretaker over there. Big fan of his. I don't have any affiliation, but if you ever did want to look into it, it's at app.crowntrading.net. Got to give him a shout out. So in this case, we can see that RSI does have a confirmed drive of hidden bullish divergence, and the scale midline here is at 43,500. It's right under the basis. It's right around the current swing high that Bitcoin put in the other day on the lows here, where it is currently consolidating. So just above that weekly resistance at 43.2. So I wanted to draw your attention to that, and the 12-period simple moving average. This is coming in at 44,650. That would put Bitcoin around the pivot of Stoke. So I do want you to pay attention to that as well. And the bullish control zone is up here. That's coming in on this particular indicator at around a 62 read. On many indicators, it is a 60 read. In this case, this is coming in at 47,330. So that would put Bitcoin somewhere around its upper second standard deviation. That would be a test of the highs and the edge of the bullish control zone of RSI. On the low side, I want you to pay attention to this. The bearish control zone, rather, not bullish control zone. The bearish control zone, the edge of it is right there at around 39,730. So basically $40,000. That would be testing the lows and the and just right below the lower second standard deviation and the lows of this current range, kind of in between the lower second and lower third. If we were to see something like that, a test of the bearish control zone, be aware that because there is support at the weekly and monthly, we'll flip back over here so I can just show you if you showed up late. The weekly there coming in right at that lower third at $39,000. And the monthly is right there at 38,500. If we did see Bitcoin start heading down there, I would be aware of a possible swing or sweep of the lows, even on a close, that could pop right back into range. So that is something to consider if we do see Bitcoin starting to fall further, because that would be the area where you'd see volatility begin to pick up, but volatility is already pretty high. But it'd be right into a major support zone that could get front run, especially because a lot of bots trade these markets. And now we have traditional market players that use pretty advanced algorithms as well. So I would be looking for that zone, a lot of buying to happen around the edge of the bearish control zone, maybe a little bit of consolidation up and out. Spikes down into that area to test it as support, stuff like that. So that is primarily the angle that I'm coming at this from with Bitcoin currently. Let's drop down to one of my early indicator timeframes for the daily, and that is the 12-hour. Now, the 12-hour is showing weakness right now. We have a turn in the bands. Basis band is pointed down, and the basis band is currently coming in at 44,250. So this is a big area to be aware of. That is the top side of this little consolidation prior to going up and making higher highs. And the lower first is acting as some short-term support here. This is coming in at this 43, 400 or so, or I'm sorry, 42,400, not 43, 42,400. If this is lost, I would look for a sweep of the local lows down here, somewhere in the mid to upper $41,000 region to that lower second here. That lower second is coming in at 40,500. So that would be, basically looking for a sweep of the lows somewhere around the mid 40,000 to low $40,000 region. If Bitcoin, however, does trade up, get above 43,500 to 600, we would be looking for the basis to get tagged somewhere in the low to mid $44,000 region. It could get swung above there. The upper first coming in at $46,000, which is right around this 12-hour high prior to putting in higher highs. And then above there, the actual highs, where the upper second is currently coming in just under $48,000. If we started to see closures up there, this is going probably for $50,000 or more. I would still look for possible rejections if it did it quickly without any compression of these bands. Then I would look for possible rejections around the highs again, at least initially, and then we come back to it and see if it either races back down the bands and or we get compression. But currently, we still have pretty aggressive expansion of the Bollinger Bands and price volatility within them, as we do see that BBWP is sitting at an 86, which is currently under 91. So this is indicative of mean reversion. I will say that because of the angle of the bands and the slope of the bands, as well as this putting in swing lower lows and closing lower lows, well, I would be looking, and it's threatening even to put in a closing lower high here if it closes like this today. But, I would be aware of trend and any kind of upside moves becoming bearish retests and then come back to it after. But more importantly, I'm watching this for a potential move up on the 12-hour, and that is the Stoke. Now, I would need to see a low put in, by the way, and I'll give you the criteria for that in just a moment. But the Stoke pivot right now is 42,350. So a closure by end of day would also obviously close the 12-hour. But I'd be looking for a continuation of Stoke to the upside here. And in this case, I would need to see a low put in. Now, a low for the 12-hour needs to be put in on a close above 43,130, and then I would subsequently need to see some sort of a closure or move above this 40,569. Nice. So basically 43,500 to 600. That would be the criteria. Then I'd be looking for further upside to go and retest. Specifically somewhere around, you'll note that there is a zone up here where we have a close open high and a close open low. So we have a close open high from January 1st up here at 45,500. Hey, that number sounds familiar, doesn't it? Let me just remind you of why that number sounds familiar. If you look here, we've got 44.5 and then on the daily pivot, but we have the upper first on the daily is right there at 45.5. That just so happens to be right in line with a 12-hour closing high and closing low. So in this case, we can see that we had the high put in, mean reversion back to the basis, spike down into lower second and third to sweep the lows before going up, making higher highs here, finding support, putting in a higher low on a close that then led to equal highs on a close, higher highs on a wick, so a nice big swing high up there into the upper second and third, and then a dump off all the way back down to the lower second, and then sideways price action as the bands adjust down as the basis turns down. Now, this setup, I'm currently looking at this particular setup, I should say, as a potential for a bearish retest. I want to be very clear about that. It wouldn't turn bullish until I saw some sort of consolidation, a spike up that begins to break this downtrend on a swing by taking out that 43.5 to 6 area, setting a bit of a higher low if it can, and then testing up further. I would be looking at it as initially a bearish retest, and then come back to it and see if it starts to form a trend. So that would be an uptrend, and then subsequently get some sort of mean reversion. So I really would want to see price hanging out between the lower first and the upper first anyway. If we see extreme moves to the downside or upside, I do think downside's probably going to get picked up initially and then we come back to it. Upside's probably going to get rejected initially and then we come back to it. So I hope that is very clear. That is my take on Bitcoin's price action. If you like, we can pull a fib here. I know some of you are big fans of fibs. We can pull it from the current high on a swing to the current low side swing of the range. And we can see that Bitcoin is trading right around this 272 and 191. Well, the 191 is a rough estimation. It would be a 192 in this case, but I use the 191 because it is a little bit more accurate. But it's just the opposite of the 888 up here. We can thank Torque for that one. Lots of back testing on his end for this. Works very well. I just have the inverse down here so we don't have to pull fibs either way to find our 888. Bitcoin has been oscillating around there and the 272, and it is trading and closing below the 382. So if you were to pull this the other way with the 1 down here and the 0 up here, this 382, of course, would be a 618. Well, where's the 618, by the way? 618 is up here at 45,682, and we have the 50%, which is also a big fib. You know, if Bitcoin did reclaim the 50% here at 44.5 to 44.6, I would be looking at, obviously, the daily, getting that Stoke turn, possibly coming up to test the highs again. I still would be careful until we saw some sort of compression, though. All right, I have some other interesting things to show you guys today. We're going to head over to the Crypto Quant dashboard, and we're going to take a look at Ki Young-ju's Bitcoin market cycle page here, where he has the Crypto Quant Bitcoin bull bear market cycle indicator, the inter-exchange flow pulse, which has actually been incredibly accurate. We're going to dive into this, but more importantly, for somebody, especially somebody that's been calling out a specific number in our chats for a while, and that would be Torque. I want to show you the crystal ball bands. We're going to start with this, actually. So let's go ahead and full screen this particular indicator. Unfortunately, you can't really adjust this, but you can see that this set of bands has a high-low side here, and you can see that price has played right to the low side of the bands and to the upside of the bands. You know, a few deviations here and there, but the low side has been incredible, and the high side has been incredible as well, although you will see in every instance the high side of the band's price typically trades slightly above it. So I want you to keep that in mind. This one's for you, Torque. All right, so let's go ahead over to the current structure, and you can see the low side of the bands is currently coming in at 22,800, and the cycle top the cycle top is coming in at 88,400. Isn't that something? Now that's also a fib area that we have previously pulled on here. We're not going to do it today, but I wanted to show you that there is some confluence there. Pretty awesome. So let's go ahead and take a look at the inter-exchange flow pulse. This is another indicator that has been very accurate as well. And this one isn't, you know, we're not calling bull markets and bear markets, although you are going to see that this has called the bull markets and bear markets. But basically what this is, let's go ahead and recap what it is. They do a much better job of recapping over here on the panel than I'm going to do trying to explain it to you. So the inter-exchange flow pulse measures Bitcoin flows between spot and derivative exchanges using Crypto Quant's Bitcoin exchange flows data. The flows show market sentiment. A growing, declining amount of Bitcoin flowing from derivative exchanges coincides with full bear runs. Bull bear runs. So in this case, the strategy seeks to get exposure to Bitcoin when the IFP is trending upward, and the shift in the trend of Bitcoin flows as defined by the IFP crossing the 90-day moving average, which is down here. I'm going to show you the blue line, blue and purple lines down there. as defined by crossing its 90-day moving average, has been a sign of bull and bear markets, green and red areas respectively on the charts. So this was made by Julio Monero. He is the head of research over here at CryptoQuant. And what I want to show you here is you can see that the red areas have coincided with a move down or below the moving average here. So the IFP pulse moving average crosses over. So we have the 90-day, the IFP crossing underneath the 90-day moving average. We saw this big pullback here in 2016 prior to going parabolic. We saw this cross again down here in 18 at the highs, and we got our bear market. We saw the lows come in right when the IFP crossed the 90-day moving average again. We got a face melting bull rally again. You may recall that we had a big quote unquote black swan event that I argue was not a black swan event. But the move up into the highs that were put in 2021 around $65,000. We saw the IFP get underneath the moving average yet again. We saw that move down into the daily Wyckoff reaccumulation. It crossed back up during this period as well. Hit the spring, came in here, hit that $50,000 level, got rejected, and then went up and made higher highs. But IFP was well below the moving average. This was a deviation above it. Moving average is heavily pointed down. And then we saw the drawdown into the bear market bottom in 2021 into 2022 and 2023. So the drawdown here, we can see that the bottom was picked out basically right on the damn low. Bitcoin was coming in about $1,000 above the spike low, but this was the close at 16.5. And in this case, we saw IFP immediately pick itself up, get above that moving average, and it's been up ever since into 2024, where we see Bitcoin has now gotten an IFP cross under the moving average here. Now you'll note the date that this has occurred. We saw IFP coming in around 580. This was on the 6th of January. And then the 7th, the IFP moving average was 577. And then we see the next day it ticks under. And this was right before the spot ETF approvals. So we're getting a lot of signs that this could be a local high. Obviously, it is a local high on our price charts for the range here, but this could turn into a longer term local high that either results in consolidation, sideways and down for a little bit. If it does pick itself back up, which by the way, it can, this is not a steeply declining moving average just yet. So, we have seen, a bit of a false signal in this before. Part of what I do want to point out here is we see the Bitcoin price over here, and we see the IFP of Bitcoin. What you must remember is, this event from 2018 into 2021, 2022 timeframe, we saw IFP just rocketing up. And, we have seen in this longer term chart, prior to this, their data goes back to 2015, little spikes down, consolidation, and then a move up. IFP gets underneath the moving average, kind of goes flat for a little bit and then moves up. And in terms of longer term trend and the price markup relative to what we're seeing in terms of flows, what this tells you is that there's a lot of flows happening here, but it pales in comparison to what we saw 2020, from basically 2018 into 2021, 2022. And this is a result of there being a lot more holders of Bitcoin and a lot more Bitcoin coming off the market and the halving. So it's a combination of factors. I would be I would not be looking at this as like, well, this is the top, and we're going to go test the bear market lows. And I will again draw your attention back to the crystal ball bands, because they have been, well, nearly perfect. The bottom side now has moved up to the $22,000 range. So let's go ahead to our charts and take a look at this on some longer term charts like the weekly. And I want to remind you that the weekly is in a very nice uptrend. And after the break of that 31.8 area, which is a big monthly area, you know, we saw the highs come in here, the swing of this this accumulation to distribution over here on the daily that resulted in the same on the weekly. It wasn't quite as long to be considered that on a weekly. It was a daily accumulation to distribution, but you know, right around that $31,800, $32,000 region, we have, you know, an uptrend here. We've got higher low structure. The first thing that you should be looking for on the weekly is when this does put in a closing high, not just a swing high like we've seen so far. You need to be on the lookout for higher lows, and specifically the big areas that I'd be looking out for on the weekly are somewhere around the basis band, which is currently coming in at $35,000. Now, of course, Bitcoin would need to break down from that 38.5 monthly support, start digging into those weeklies at 37.7 to 36.2 as well. And it could happen like this, where the basis starts to move up into those weeklies at 36.2 to 37.7, maybe even the monthly at 38.5. But below there, when you see structure in a you know, price in a higher low structure, I should say, I'd be looking to the lower first as the most viable area should the basis start to break down. And this is starting to come in around $29,000, likely to update to $30,000. And you'll see a quick compression of the bands should Bitcoin come down to the basis lower first level and not hit that lower first, but start hanging around the basis. We'll see a quick compression of the bands as well. From there, you look to the lower second, and wait, where's the lower second coming in? Oh, it's $22,000. Hold on. Didn't we just look at that? Where was this? Oh, the cycle bottom band is coming in at $22,000 and $22,800. So that means that if Bitcoin closes up here this week or anywhere above the basis, we're likely to see this lower second start to really climb up and possibly be even above that area. That's where, if Bitcoin did have a crash scenario where you see it come down below that, trading below that lower second and not closing below it, that's where you could see that particular cycle bottom area get hit. And then, of course, probably provide a lot of opportunities. So I do want to remind you that the bands here on CryptoQuant for the magic ball bands or whatever, what do they call it? Crystal ball bands. These are going to update day after day. So the top and bottom side of the bands will continue to move up. I did just want to call out that top side of the bands is right there in a very confluent area for some major fibs, and an area that one Torque here in the chat has called out many times as a big area of interest for looking for a cycle high. Just be aware that is going to continue to move up day after day and week after week. So, but that $22,000 area I thought was very interesting on the cycle low side of the bands, because it is confluent with a big weekly area. And if we look at the monthly area, you can see that we are getting expansion of the bands already. Anytime that the monthly has kicked off expansion, even after swinging the local high. I want to actually bring up a response that I had put up here. I had responded to Credible Crypto, I believe. He was looking or responding to somebody else who was looking at bull bands. Give me just a moment here. I got to scroll, and my scroll, I love this mouse, and it's kind of falling apart right now. So the wheel is a little squeaky. My apologies if you can hear that. We're going to pull up this tweet by me in response to Credible Crypto. And I'll just kind of walk you through this. So he came across this chart that Tony the Bull had put out, and this is some bull band stuff that he was talking about. And I believe they were talking about a C wave. Or no, he was looking at different options, and this was Posty, and Tony the Bull had noted that we are trading above the weekly Bollinger Bands. A little bit different settings there, with the upper coming in at $42,000 now. This is, in my opinion, not quite as accurate. So I had responded to this, and I had noted that the following charts are the 1 month time frame triple Bollinger Band setup. I believe I saved this as well, so let's go ahead and take a look at this. I had mentioned, where did I mention this? I had mentioned that I had something that I wanted to show him. He acknowledged that he wanted me to post it. I posted this. Hey, Bobby. So I had posted this particular chart. So let's go look at this so we're not digging through Twitter or x.com. And we're going to go to not the CME chart, but the index chart. And I believe I have this here still. It is cycle expansion. I believe this is the one. Yes. All right. So let's go ahead and look at this real quick. We've talked about this before, but I want to kind of visualize it a little bit better here. So we can see that we had the first lower high of the bear market over here in 2014. We had the bottom come in down here around the lower first. We saw compression, more importantly, of the Bollinger Bands on the monthly time frame. Then in May of 2016, we started to see expansion. After expansion occurred, we saw a spike into the upper second, upper third area that swung the first lower high on a close, and in this case on a wick as well, of the bear market highs, lower high of 2014. It came back down, spiked into the lower first band, put in a higher low, and then marched on to a parabolic, into its parabolic phase. We can see this again. It occurred in 2019. Now this is a closing. This is the first real closing lower high. Yes, there was swing lower highs in 2018 over here before putting in the macro low, but we saw the first lower high in 2019 on a close, comes back down to the basis, spikes into the lower first. That seems familiar, doesn't it? And then we get our expansion over here. We had a swing of that lower high. We saw a move back to the lower first. We see compression, and then we see expansion. And after the expansion, we get a nice parabolic run in Bitcoin to the 2021 highs. And what are we seeing occur right here? Now, the criteria that I explained to Credible was that basically the first bear market close gets swung on the monthly time frame, either after expansion or just prior to expansion. So this in 2016 was after expansion, and then in 2019, 2020 time frame here in October of 2020, this was just prior to expansion. So it's just a couple candles before expansion here. Swings the high in August of 2020, gets that expansion and moves on. So basically what we're looking for is a swing of the high, and then for it to move on either after expansion or prior to expansion. Now in this case, what we see here in 2023 and 2024 is the close above the upper second, kicking off expansion, and now we see the swing of the first bear market of the first bear market lower high. So in this case, what would we naturally be looking for? Well, I'd be looking to the upper first if we start seeing the upper second close below. and that is coming in at 34,389, likely to update to $35,000 and above. And we have seen it swing down below on a Wix, so I would keep a close eye on it. And even the basis band, which is coming in around the 26,800 area, likely to update a little bit more aggressively coming into February if Bitcoin is closing anywhere above the upper first or upper second. Keep in mind that the upper second is coming in at 41.8, right there at the weekly support resistance zone that Bitcoin is currently consolidating in. So big areas to pay attention to. Anytime we have seen expansion in just about any asset or indice, Bitcoin included, obviously. Anytime we have seen expansion on the Bollinger Bands on the monthly time frame, we have seen it result in massive upside moves. They don't always just start ripping into parabolic phase, but it starts to kick off that expansion and then it builds over time. Sometimes it takes a little bit of time. So this, first quarter of 2024 might be fraught with a little bit of peril, but what do we have coming into the second quarter? We have the halving. So I would be aware of positioning prior to the halving, and that's probably what we are seeing now. We got the first swing of the bear market lower high. So we're ticking all the boxes, man. So this is not the time to be fearful in these markets. So I do want to stress that. All right, let's go ahead and peruse the chats real quick here. Give my voice a break for just a moment before we move on into some other things that I'd like to show you. Also, let me know, is that information stuff that you guys were interested in? I do want your feedback either in the comments or in the live chats here. So let me go ahead and take a look here. Say hi to a few of you as well. Hello, no name, Bobby. Spin is here. Hello. Baba is here. Sam is here. I see Don is also here. How you doing? And quite a few others that are just hanging out in the chat. If you would like to chat, go ahead and subscribe to the channel and then hop into the YouTube chat down below. If you are watching this on X, formerly known as Twitter, I would suggest that you head on over to the YouTube chats if you do want to chime in. And also if you are on Twitch. Now you can find me on YouTube. It's linked in all of my bios. It's Landy's Crypto Corner if you just wanted to search it as well. Let me go ahead and look here. Just acknowledging that you guys could hear me from the beginning of the stream, saying hello to each other. Got some, oh, wow. Oh, come on. Only 88K, Spin says. With everyone expecting 100K or more, why not let everyone wait for another cycle again? Hit likes, you LARPers, says Poppy. I'm degen trading. I see. Look, those bands that have been incredibly accurate over there on Crypto Quant are going to update day over day. If you wanted to get a long-term look of kind of where I believe things are going to be going, we can head out to the monthly and just take a fib here and look at some of the important levels from the bull market high back in 2021 to the lows in 2022. And you can see that there's a lot of confluent areas. We just so happen to have a major 1272 coming in right above or right below that, the band highs, but, recall that they get spiked above at that $88,000. In this case, the 1272 is coming in at around 83,500. We might need to check these. Are they on log scale? No, we need to put this on log scale. My apologies. So that was incorrect. That was not accurate there. On log scale here for the monthly, we're looking at the 1272 being at $100,000. Sorry. And, that would be something to watch day over day close on that crystal ball bands for Crypto Quant. They've been incredibly accurate. In fact, had I been looking at it, that would have just been added confluence to our $15,500 call for the lows. That just would have been further confluence. But day over day, they're going to close higher and higher. Currently, they're in that confluent zone that Torque had pointed out, and I just wanted to give him some props because he's got a lot of confluence in that area. We've also pulled some fibs locally for this particular move up that also point to that area that we can look at in just a moment. I wasn't going to, but it is pretty interesting. Above there, you see the 1414 rather, is coming in at about $128,000, and then the 1618 is coming in at 173, 1786, of course, coming in up there at 222,600. 1888 is at 260,000, so on and so forth. And to get some sort of an idea on how these things are confluent, all we have to do is pull a fib, from the prior cycle high to cycle low, and we can see how that matched up with, the current cycle highs that we have in here, and that was at the 1618. So if you were to translate this over and start to look at this from that perspective of a possible 1618 spike, we're looking much, much higher. That would be, what did we just say? The 1618 is at $170,000, give or take, 175. And we saw that spiked into twice. And you can take this further back as well. You can go to the index and you can look at where the prior cycles. This was far more extended from the 14 to 16 and then subsequently the 17 highs. But you can get some confluent areas as volatility. I think volatility is not going to match to these levels. It's going to get less and less over time. So here it went all the way to the 272, and then it went to the 1618 after the drawdown from 17 to 18. It could be a case of where this hits the 1272 to 1414 area, which is around 100,000 to 130,000, which is pretty confluent with a lot of the things that we've already been looking at. If we head over and pull another local fib or a local fib, we can pull the current move on the monthly, and we can look at the confluent extensions here. You can see the 1272 is currently coming in and cutting across the highs there at $67,000. So right in between the first higher high that was put in October of 2021 was right there at $67,000, and then a nice little run of that area. And this is from a local fib pull. So above there, you've got the 1414 coming in at $79,000, so $80,000, and then the 1618 is up there at, well, guess what? $100,000. We were just looking at that on the 1272 from the highs to the lows, and then we've got the 1786 to 1888 bracketing the $130,000 area at 1786 at 121 to 137 at the 1888 up there. So for the current move, though, that 1272 to 1414 is going to be the biggest area that we'll be discussing when looking at the actual highs anyway, around the highs at 67 to 69 to up around $80,000, and then possibly that $88,000 region. So, a little bit of fun with fibs. We can definitely get some confluences there. All right. Let's go ahead and take a look over. Bobby says you haven't used trend fibs in a long time. Well, I mean, we could. You can just go to the weekly and use a trend fib, and you can see, from this here low. You could either take the higher low here to measure this move, and you can see that we spiked the 3272 by the upper second on the weekly. You see that the 272 here is directly in line with the open from December, so at $40,000 or so. You can also extend this if you like to the actual low. kind of doesn't matter. But you can see that this hit the 3 spot extension in that case, and we're hanging around the 272, and a markdown to the 2 spot would be the actual weekly at $39,000. So there's many different ways that you can pull these to find your confluences. You can see that the lows or the bottom came in around the 618 here from the lower low or the actual low. But if you take the higher low, you can see it's still the 618. Things kind of hung out on the 702 there before picking themselves up. You know, I would prefer to take the higher low as it was a trend shift. So higher low after a bunch of lower lows, then you do your your fib extension or trend fib in this case, and you can see that it's hitting all the major areas. Just above where we're trading now in the upper second, you've got $50,000 at the 3414, 3618's at 52, and the 4 spot extension is there at $55,000. And what have I been calling for? Above current price action, if it was to take out 49, mid to low $50,000 region. So, you know, that's you're going to find confluences, and you should be finding confluences. These aren't like, it's not magic. Like these things, if you're not finding the confluences, then you need to reevaluate what you're doing. But you should have confluences in all of this. Now, even the current range from high to low, from the current range highs to the prior range lows here, you can even pull a fib locally for this particular move, and you can take one of two moves. You could take, this was a bit of a downtrend here with the lower low. It was a trend break on the lows here. So you could take this, and you can see the 50% fib is coming in right around $35,000, which is a monthly. If you take the higher low on the weekly, it's a little bit higher there at $36,000, just above the basis. So you're basically getting the 50% fib bracketing that basis between the low side of the consolidation and the higher low coming out of it. And in this case, these are all areas we've been talking about. The 618 coming in at 38.8 there from the higher low. And if you pull it down to the lower low, the 618 is coming in just below $38,000 at $37,000, $37,900 or so. 786 cutting right across the current upper first as well. So, there is precedent to especially be looking at $35,000 as I showed you on the monthly. That's a big area, right? So, keep an eye on it. That's the upper first on the monthly. All right, so let's go ahead and take a look at Dixie, as Dixie's been doing okay, but it's in a local uptrend. So it's in a closing uptrend on the daily right now, coming off the lows. It is in a swing uptrend as well, but it is getting a little exhausted. It's not ready to start curling over just yet, but I want you to note BBWP. This is mean reversion from the lows back to this consolidation over here. This consolidation, as you may recall, on the low side at 102.5 to the high side being up there at around 104.25. So this is a bit of mean reversion. It's showing on the bands. Yes, we're getting expansion, excuse me. This expansion is headed right back towards a major area of resistance, though. Give me just a second. Woo. All right, so upper second close today. We're going to see aggressive expansion, likely putting the upper third right there in that resistance zone around, 104.20 rather to 104.5. Upper second's probably going to chase with price around the current wick highs at 103.69. Nice. Again, always with the meme numbers, right? If Dixie does put in a high here, from where it is right now, it can come all the way back to the upper first and not close a daily high, meaning a closing high would just be a swing high. So I would be aware of pullbacks on Dixie that hold above the upper first. That is currently coming in at 102.77. I would expect this to be somewhere around 103. But even if it lost it, if it does not close below this open on Tuesday, that is going to be yesterday's candle. The open was coming in at 102.74.75. So as long as Dixie's closing above there, it's more likely to test further up into the low 103 upper 103 to low 104 region. If it does lose the upper first, we're looking for it to come back to this consolidation somewhere around the top side at 102.5 to the basis and support here. The basis is coming in at 102.12, and this base of support is coming in the upper 101 region to 102 even. So that would be what I'm looking for locally with Dixie. If we head over to, let's look at Stoke. Stoke is also hitting some upper levels. So if we did start to see it losing 103, it would turn back down. RSI looks good, though, to keep testing up. This is a retest or a bearish retest of the bullish control zone. So just keep that in mind. I'm not looking for this to get a full-on reversal just yet. If it is going to try for a reversal, it needs to come back down and, somewhere around the higher lows here and then hold them, or even the lower lows and hold it, sweep them equal lows or lower lows on divergence. Then I'd be looking for a reversal. I'd also want to see, if you want to see strength in Dixie, you don't want to see it moving up into the overhead resistance, rejecting, coming back down, and then losing its higher low structure. Then it's, in for more consolidation, and we come back to it. If we take a look at gold, gold is breaking down from some of the important areas that we were talking about. This coincides with Dixie moving up, obviously showing some strength. Gold is currently turned back down on Stoke. The pivot is $2,011. We can see that it's headed towards our area of interest here at 1980 to 1965. If it does get there, it needs to hold it. If it does lose it, it's going to be a swift drawdown into the 1930 region, and this is going to be a big one. If it loses that area, it's back down to the upper 18s to 1900 area. Realistically, if you're in gold and you're looking for a long trade, not financial advice, but I would wait for it to confirm holding this zone here at around that 1980 to 1965. Beware if it front runs it. And I would keep a close eye on possible reversals off the lower second and third that put in a low that comes on any kind of bullish divergence. I will say that this setup is, I'm not seeing a good long setup for this right now. It might present one, but it is still in hidden bull div territory for RSI. But if it does head down to the bearish control zone, that will be around 1993 currently. So that's where we start looking at the lower third, which is where 1993 to this 1980 to 1965 region, and pay close attention to how price reacts to that area if it gets there. If it does regain 2016 bucks, keep an eye on the lower first, which is currently coming in at 2030, to this resistance just above it at 2034-35 region. If it can recover that, I'd be looking for a test of the basis right around this consolidation and swing area, coming in at 2040 to 2050 bucks. Above there, we're looking to this spike high rejection at the upper first at around that 2062 to 65. And if it can make it back above there, we're looking at 2080 and beyond into the 2100 to mid 2100 region by the highs up there. Now, moving on to TradFi, we've got Dow putting in what could become a daily distribution, but I would be aware of thinking like that right now until you see any kind of confirmation. And quite honestly, it's testing the low side of this consolidation. This is just a consolidation until proven otherwise. Proving otherwise would be a breakdown below the lower second here at 37,150 that takes out this close down here at 37,082 bucks and subsequently loses the prior all-time high there at just under 37 at 36,952. If that were to occur, I'm looking for a larger drawdown back to this short-term consolidation, anywhere between 36,260, 270. You could even take 36,300 up there to the low side of the consolidation at 36,000. If 36,000 is lost, I'm looking for a larger drawdown into around the $35,000 region, 35.5 and then 35,000 even. If you do see something like that, that would be supported here on any continuing closes below 37,620. It's currently trading at 37,200. So wouldn't be too much to ask for this to come back up. If you're looking at RSI, scale midline is at 37.1, so it's still within the local range. And the bearish control zone is at 36.5. So that 36.5 would be right around this consolidation. So slightly above it. This is 36.3. It's likely to update to be around this consolidation after close today. So keep a very close eye if we do start to see a breakdown in Dow of this shorter term consolidation, and look left. When you look left, this is right around the closes of the prior all-time high. So keep that in mind. I would not be surprised if it started to break down for it to head to that area and try to hold it. Doesn't mean it will, but anywhere back above the upper second here at 37,862, I'm looking for 38, 38.2, 38.5 region over time. Let's go ahead and take a look at NASDAQ, which is painting a bit of a Mickey Mouse pattern, but it is, as I said, a consolidation until proven otherwise. If we do see the low side dropped, I would be aware of the prior consolidation before making the new all-time high. This is 16,250 on the lows. That would be below the lower second. So we would need to see NASDAQ break down below the lower second and take out the lows on a close. At that point, it's probably already testing this consolidation zone. The high side is coming in at 16,166. Low side is coming in at 15,700. Below there, I'd be looking for a gap filled down to 15.5, possibly a retest of the mid to low $15,000 region, 15,171 on this spike, low prior to the gap up to around that 15,350 or so. If it can recover above the upper first, I'd look for the all-time high to get run again around 16,969. Again, more meme numbers. To the upper second standard deviation, which is still coming in there out around that 1750 to 70 to around 17.1. If it did start to trade up there, then we're looking into that low 17 to mid 17,000 region. Now, when looking at Stoke, you can see that it is threatening to turn over 16,669. You gotta love the freaking meme numbers, right? It is currently trading at 16,660. Jeez. But be aware that bearish divergence is threatening to populate on a high today. The scale midline is coming in at 16.5. So again, we're getting some confluence there. Bearish control zone coming in at 16,000. All the same areas that we just pointed out. So that is that is right around this consolidation zone. So that's what I'd look for. And then come back to it later, especially if it starts to break down from the wick low at 15,700 or so. But nothing really concerning. I'm not seeing bands curl over just yet. It's got to really start breaking down below that lower second, lose the wick lows of the range here. Again, that's coming in around 16,250. So that would be what you want to watch coming into our Friday live stream that we will be having here. We see that, bigger consolidation structure. Bands are setting up a range right now. Any closes below the lower second that lose the wick lows here at 466. And then we're looking for it to come down to around, 460 to 450 or so around this consolidation. That would be expansion into retest this area as support. Lower first, it's kind of getting a bounce. That's coming in at 470 below there. Then start looking for the lows here at that 466 and lower second, which is coming in just above it at 467. If it can regain the basis, I'd look for a test of this upper first right here at resistance at 476. If that area is taken out, I'd look for the local highs up here in the 476 area to the prior all-time high there, just under 480, coming in at 479.98. Above there, I'd eventually look for around 500 points initially. 5 points at a time. 485 to 490, 495 to 500. So that is my take on this stuff. We do see that we're looking at an initial cross down and confirmation coming into close today on any closures below 474.84, so basically 475. We do see a confirmed drive of bearish divergence with the scale midline of RSI, kind of the next major target for RSI, and that's coming in at 469. Nice. More memes. The bearish control zone's coming in where? 458 to 460. So literally all of the confluent areas that we just talked about. Again, that 460, 458 to 460 area would be the top side of the consolidation prior to the move up. So that would be a pretty major structure change. But I wouldn't be looking for it to race until we saw the lows at around 450 to 453 taken out. That is pretty much it for today's analysis. Not enough right now in history to start looking through the ETFs. I mean, we can just kind of poke at them. Look, they're down. Some green candles. GBTC is drawing down to the daily basis band. Everybody's making such a big deal about this outflow. The outflows are getting picked up by the other ETFs, right? This is something that was expected in the markets anyway. But still in a freaking crazy uptrend. Let's see what's DeFi looking like. Big drawdown, losing the lower first right now. This was, just sparsely traded prior anyway. Let's see. Where's IBIT? Oh, it's down at the bottom. Just down. Some dojis on the daily. There's nothing really here to concern ourselves with just yet. Once we get some more history, we'll be able to do some technical analysis on it. And either way, you should be looking at spot to understand which direction ETFs are going. So let's go ahead and turn on the DGen chart. We'll go down and satisfy the DGen urges here with the 30-second chart. We're going to turn back on the tunes to a lower level so that I can talk over them. And I'm going to peruse the chats real quick here. So let's go ahead and do this. All right, get a little bit of background music to cover for some of the silence here. And Bobby says you need to change your account name to Landy's Crypto Corner 69. Yeah, basically. Good old Fibs. Bobby, I usually don't degen anymore, but when I do, it's 99x from 42 to 50. Oh boy. Bobby says he nailed an ultra degen trade entry. Oh, okay. So you're trading the current price action. Spin is looking towards the top side of the weekly there at 43.2. I'd give it a zone to 43.2 to 43.5. Starts to break above, then you've got a really good trade on your hands. Not financial advice. If it were to do that, let's go ahead and look at the hourly. In fact, hourly spiked the basis just around 42,690. Wow. Just can't get away from the memes. You can see that the hourly has plenty of potential to throw bullish divs right now. So, it's got to resolve this consolidation. If you're looking at the chart that I thought was interesting, which was the volume chart that I showed you guys on Monday, we've got a a lot of interesting things to pay attention to in the local range. But realistically, 43.5 to the upside. Above there, we're looking to, 44K, which was this high volume spike high up here. Let's turn volume back on just so that we have it on our charts. Yeah, so I mean, we've got high volume on this low side structure, high volume on this spike high. So realistically, above 43.5, 44 is going to be the next big area to get through, or big area of interest. Above there, it's 44.7 to 45,000. Big zone up there to around $47,000 actually. In terms of volume, I'm sorry, $46,000. Sorry, $46,000 up here. So above 44, 44.7 to 46 is kind of fair game. Down on the lows, we're looking at the 41.8 to around 41.4 to 5 as being the zones of interest. We are seeing just in between these two zones of interest, we saw some high volume trying to put in this low. This was regained from the 15-minute perspective, though. This has got some work to do if it wants to go up and test the top side of this consolidation range. Currently, it's got some room, but 42,430 is going to be the number to maintain this momentum to the upside at the very least. Hourly is pivoted at that 42,340. It is pointed up. I like the 2 hour. So if I'm looking in between the 4 hour and the hourly, the 2 hour is a good one to pay attention to. And this is currently coming in at 42,725 for its momentum pivot. 3 hour is at 42,833. 4 hour is at it's all the way up near that. It's in that zone at 43,250. So it's not much is happening unless we see the hourly really start breaching those areas. If we did start seeing that, and then the 4 hour turns to the upside, this is a hot tip for you. 4 hour turns to the upside. If we see that, look to the 12 hour. 12 hours should start to accelerate out of the oversold zone. Probably looking at testing the local highs of this bottom side consolidation and up into the 44, to $45,000 region. Something to be aware of as well, if you have a 12 SMA on your chart, is that we are seeing price trying to regain the 12 SMA, or RSI trying to regain the 12 SMA here, basically right on it around the 42.8 region. If you look at the 4 hour, this isn't the kind of, you usually don't see RSI move up like this and then just blast off, but it's not out of the ordinary either. It's not typical. Usually it tests back down, look for more divergence. The bearish control zone's currently coming in at the low side there, around $42,100 to $42,000 for the edge of the bearish control zone. But I'd be looking for, if we see a spike into this zone down here, I'd be looking for bullish divergence to at minimum pop it back up into the zone initially if it doesn't just lose it aggressively. So that is kind of what I'd be paying attention to. Let me turn my monitor on, make sure that everything's. I'd be looking for bullish divergence. Okay. Yeah. Oh, my laptop speakers suck. But yeah. Any questions about this stuff? Bobby says, to be clear, I'm degen trading the 5 and 15 minute. Yeah, the bull divs are building up on the lower term time frames, but we got to start seeing the follow through. And from the position of the 4 hour right now, I'm not seeing too much. If it does start to turn, keep it on the 12 hour and see if that bleeds into the daily. And then maybe we have a bearish retest scenario that could possibly turn into a resistance flipped into support again, and then maybe a trend starts to form to the upside. to take the highs. Right now, I'm not necessarily looking for that. I need to see that develop over the course of the rest of today's daily and into tomorrow and Friday to really gauge whether or not these things are going to be viable. Yeah, the counter trend trade was long off of this area, yes, after this stair step down, which is likely a lot of movement from GBTC is likely what we're seeing, and then that has to flow back into by end of day is going to flow back in. We'll see it on chain flowing back into the other ETFs most likely. And I do want to give props to Spin for asking or confirming what he had read about that, because it is important. It wasn't something that I had previously been talking about very much, but once you start getting to the close of day, they got to start backing the shares that they sell. Trust me, they're not doing redemptions right now either. If anything, they're short-term redemptions that equal out. They're overweighted on the creation side. So for any shares issued, they need to back them with Bitcoin. That has to happen typically in that window about an hour before it closes when it needs to start. So then you can go to mempool and you can start monitoring the movements on chain if you want. Whale Alert is pretty good on X or Twitter. And there's other tools as well looking for those flows. And you're going to get an idea by looking on chain. You can get a better idea of what the volume lags on ETFs. So it's going to be plus 1 to 2 days before the data for volume and flows starts to populate. For instance, on Bloomberg dashboards. So or Bloomberg terminal. That they're going to be running behind. You'll likely see the movements of those coins into custody to back the shares coming into, starting at around an hour before traditional market close. So, I mean, I believe I was speaking with Torque, and I linked him to one of the multi-sig wallets, that we've been watching on chain for a while, that you can see where the flows are going. And there's 9 major participants right now outside of GBTC that so there's a lot to track, and it's eventually on-chain guys will nail down which wallets are which, and we'll probably see some sort of indicators pop up on your various sites like Glassnode, CryptoQuant, CoinGlass, and the rest. I did, it's probably worth looking at open interest here as well. So let's go ahead and refresh this. Yeah, I mean, open interest just kind of going sideways, which is fine. It's just under 11 billion right now. Nice drawdown into this area. If you wanted to kind of visualize what this, looks like, it's where it should be relative to price right now. So, around, for this area, we've seen open interest kind of hanging around the 10.5 to 11 billion dollar range. On the low side, you get that 10.5 on the spike lows from the washout back here down to what was that, 40,500 or so. When looking at something like CoinGlass, primary reason why I come over here is to take a look at CME, and as long as CME is leading Binance, then we've got the professionals ahead of the degens right now, and that's what you want to see in terms of OI. So, yeah. Any other comments or questions before I jump off here? Go ahead and get them in chat. I'll give you guys a few moments here. I'm going to go get my coffee real quick. We got any burning questions? Uh-oh. Bobby's bringing up ordinals. He's going to turn me into a degen. I've just been minting every ordinal I can find. Most of them are scams, but some of them might hit. No, maybe Friday I'll look at, we can take a look at bonds. Yeah. We can do that on Friday. We'll do that kind of in this section of the stream, after the bulk of the analysis is done on Bitcoin, Dixie, gold, and traditional markets, and we'll take a look at bonds. Right. Just remind me. Yeah, remind me, please. Is Jay Powell talking this month? End of the month, I believe. I believe there's a meeting at the end of the month. Let me turn on events here so I don't have to go and log into a bunch of sites on stream. We can do this. Events. Let's see, what do we got right now? Retail sales month over month occurring today, towards the end of the day. Building permits, Michigan Consumer Sentiment. I thought maybe it's just a speech. I don't think they have anything major coming up, do they? Can you guys let me know in chat? I don't want to go log into the Fed site right now while I'm on stream. But if you can check in the chat for me, let me know. Is there a meeting? I thought it was late January with Powell. Are you texting me? Did one of you guys over there text me? Oh, okay, let me look. Jimmy, I'm gonna say no, not this week, in response to your text. Okay, yeah, Bobby is confirmed. Yeah, January 30th to 31st. There's a meeting. Is there going to be a rate decision, Bobby? I thought it was, for some reason I didn't think there was going to be a rate decision until later in the quarter. I think it's just a meeting, if I'm not mistaken. I might just have to look at it. Friday I can get back to you guys as well on that. If I'm not mistaken, I believe it's just a meeting. Yeah. You don't see rate decision after that, right, Bobby? I mean, if anything, with the way numbers were, they're probably just going to hold them steady. The way inflation numbers came in, I could see them just waiting to begin drawing down. I mean, they're already pumping banks with liquidity, so it's all been silent bailout for like the past year. Ever since SVB, SBNY, and regional banks started going under, a lot of banks that hold commercial, they've been funding. Next big meeting is March 19th, 20th. Okay, cool. All right, well, I think that's going to do it for today. I want to thank you all for hanging out with me, for supporting the channel and all that stuff. As you all know, all of this stuff is free. Indicators are free. It's here to help navigate you through the markets, teach you a little bit about trading, and give my perspective on what it is that I see happening. I want to thank you again for hanging out with me in the live streams and watching the recorded videos. If you can, hit the like and subscribe. That does help out the channel, helps me grow, helps get some of this free information out to others. If you are over there on X, go ahead and give me a follow. And give me some feedback on the indicator if you are using it. Of course, you do need to follow the link. It is not publicly searchable in TradingView, but it will be soon. From there, I'm just going to wish you a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with all of that being said, I'm going to get the timer ready. I'll leave the tunes on for those of you that like to hang out and listen to some music while you're kind of going through some charts, looking at some of the things that we talked about. And yeah, that's going to be it. So with all of that being said, Landy out. Have a good one.